Hello, and welcome to Ethics and Corporate Social Responsibility. I'm your Professor John Harvey, and here we are in week 7. So we're getting close to halfway through the semester. Let's talk schedule. So this week you are working on chapters 6 and 7. And it's kind of a weird one because we've got 2 chapters in there, and this is the week that I was warning you about. It's like you kind of got into this run rate, kind of used to, I'm doing a chapter a week or whatever, and, I've got my standard kind of stuff. And then I throw it all up, by having to do 2 chapters this week. And yet I drop some assignments and other assignments are worth more points. And so it's all kind of like, it's weird. So check out the schedule, look through your weekly module and just know that things are a little different this week. It's also a little weird because chapter 6 is in one segment and chapter 7 is in another. And so, but that does give me kind of that point to highlight for you guys. Those we have those different sections in the textbook, and those different sections correspond to that group project, right? So if you're in group 1, you've got that section 1 has kind of questions, and if you're in group 2, use that. So hopefully that's kind of a quick reminder for you on that. Now, your corporation papers are due next week as well. So hopefully everyone's watched through the corporate video. Chapter 6 and 7 definitely fit right in with this conversation. So in chapter 6, I think it was asking, who owns a corporation? And, I got to say this book, it really has quite the bias. I'd love to find a counter book to talk about this, because I think it's important for you guys to understand ethics, make good ethical decisions and have some framework as to, why do you make the decisions you make? And, when you're struggling with something, what are some frameworks that you can use to try and figure out what's the right decision for you to do, at least give you something defensible as to why you chose what you did. So I think all of that is really valuable. It is something that we need to talk about. It's something that's important to not just this course, but to you and moving forward in life. We need our society, we need our students, we need people in companies that are acting ethically, and that's above and beyond just what's in the law. That being said, the idea of, how this book is saying, who owns the corporation and what's your responsibility of the corporation, all that, man, it is really, coming down hard on corporations and obligations on that. What I'd say, for interest, I'll tell you a little side story. For one of my wife's birthdays, I went ahead and bought her a share of Disney. And it was really fun, because I was thinking, what do I get her that, it's like a box of chocolates or, you already get stuff. And so at some point you kind of max out and it's like, okay, well, what can I get her? And I thought, she loves Disney movies. She loves going to Disneyland. What about, a share in Disney? So I bought her a share of Disney stock. And it was one of the coolest presents that I could have got her. Bear in mind, the first year, she was like, yeah, okay, I don't get it. Why'd you buy this for me? But what happened was, after the first year, the corporation started sending the annual statements to its shareholders. So every year she would get this thing in the mail about the corporation. And so it would show pictures of Disney, and then they talk about, their different holdings and, what's been successful and what hasn't been successful and what they're doing and the direction they're going. And I can remember at one point they were talking about, well, we really thought this movie was going to be a big hit and it turned out not to be. We're still trying to figure that out. And so it was like all this kind of interesting kind of backstory to Disney. And then she got really interested in just watching the Disney share prices, so we'd go watch a Disney movie and she's like, oh, that was a good one. I wonder what the stock's doing, and then she got all like interested in watching that and seeing, the stock price go up or down, or, when they'd have a change in CEO. So, she was interested and interested at a different level than ever before when she started owning shares in the company. Now, you can make the argument that these large mutual fund companies, Vanguard or, T. Rowe Price or any of these things, they have billions and billions of dollars in holdings, so they own huge percentages of these companies. So, if Vanguard says, hey, we don't like what you're doing, like the corporation ends up listening, right? So they have a much louder voice than, my wife with her one share. Totally acknowledge that. But what I am saying is that my wife, owning a share of that company, was watching the performance, watching what was happening with management, very interested in that. And you could ask her about it and she would have information because she had some vested interest in it because she owned a share of that company. Now, the textbook goes through and starts railing on the idea that a CEO and has, this obligation to maximize shareholder wealth, right? And the book kind of makes the case that that's not an actual requirement. Again, this is such a weird book in this way. What I would tell you is let's look at a really interesting example. One of my favorite modern examples right now is Michael Dell. So if you look up Dell, they have PCs and monitors and, all that kind of stuff. Well, Michael Dell started the company out of his dorm in college. He was building computers and putting them together and then selling them, right? So he knew enough how to make a computer. So he was selling them. There was at the time where computers were just, catching on and people were getting them and starting to use them and the internet and all. Anyway, so it took off and Dell became this large company. Well, part of what Dell did was they eventually took their company onto the stock exchange. So I think they were on the New York Stock Exchange, and they do that in order to raise a bunch of funds. So what happens is they have a whole bunch of shares that they will put out into the market. Buyers will buy those shares, and they get that initial price of the shares. After that, those shares are out in the market, and people are buying and selling them, so the price goes up and down, and it doesn't necessarily affect Dell unless they keep out some of those shares. But so what happens then is, they don't have full ownership of the company because those shares are out there and floating around. And then people in the market are like my wife, they want to know, well, okay, Dell, how did you do? What did you do this quarter? And how many computers did you ship? And all that kind of stuff. And so for years, Dell was a very popular stock that was doing really well. And eventually, Michael Dell got really frustrated with the expectations of the stock market. So the idea that, you had to produce quarterly earnings, you had to always make more money than you did last quarter and that kind of stuff, which again, the book is saying, that's not the case. Anecdotally, that does seem to be the case, and that's definitely the perspective that CEOs have. So whether they do or don't, and if you look at the Dodge Ford case, and the book's trying to argue that that isn't a good case, and it's just a weird thing. What I can tell you is Michael Dell was saying there's so much expectation on my company that I'm not able to run my company the way I think it should be. And so he actually took his money and bought all the shares off of the stock exchange. So Dell is now a privately held company. It's no longer on the stock exchange. So you can't buy Dell shares. And so it's fascinating to see that, because he went through the whole thing of having a company, going onto the stock market so that people could invest in Dell, and then taking it off that so that he could just run the company the way he wants to run it. So is Michael Dell now focused on maximizing profit, or is he focused on his corporate social responsibility? You go research and look at it for yourself. What I can tell you is that Dell is still out there in the market. They're still making products. And I love the fact that he just said, I'm tired of this little rat race thing that's going on. So I think that's pretty cool. It's a different thing, and if you guys want to look at that in comparison to what the textbook is telling you, that's something to think about. All right, guys, with that, have a great week. Like I said, work on chapters 6 and 7 this week. Make sure and get your corporate papers in, and don't drop your group assignment, man. You guys should be well into assigning roles and figuring out who's doing what and kind of getting that squared away. So, all right, with that, have a great week, and I will talk to you soon. All right.